Before we continue with the show, I want to provide the PI listeners with an opportunity. Like me, you probably invested in the stock market and found out that you could do better with real estate. You probably have invested in real estate yourself and found out that you created another job. You're already busy making a living to provide for you and your family. You don't need another job managing tenants and organizing repairs. What if there was another way? What if there was a way for you to benefit from real estate without having the burden to be the landlord? At the Fortes Company, we partner with investors like you and provide opportunities that are specific to your investment criteria. We operate the investment and you enjoy the benefits of passive income and everything that comes along with real estate. You deserve to keep your spare time and continue to make memories with your family. Go to www.investwithfortes.com and see how easy it is to become a passive investor today. The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com.
Are you a busy professional looking to diversify your portfolio? Ever wanted to passively invest in real estate but don't know where to start? John Fortes provides you with a guide to passively invest in real estate. This is the Passive Investor Show.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications. Our goal and purpose of this show is to be a resource to passive investors and help them master their passive investments in real estate funds. Today's quick hitter is about cash-on-cash return. The cash-on-cash return is a short-term measurement. It's calculated by dividing the cash flow by the initial investment. It is basically the relationship between the cash flow from the asset that you acquired, in this case, multifamily syndication, and the initial equity investment. Two types of cash-on-cash returns in apartment investing is cash-on-cash return, including profits from sale. And then you have cash-on-cash return, excluding profits from sale. This will show passive investors how much money they should expect to receive with each distribution during the hold period, as well as the average annual return of their investment. To give you a good example of that, let's just say you put $50,000 in an investment and the monthly returns look like $358.33. That is roughly $4,300 a year. Now we put $50,000 in. That gives you an 8.6 cash-on-cash return. I hope that clarifies what the meaning of a cash-on-cash return is. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. As much as it pains us to leave you, but you know what time it is. It's time to go put this into practice. Till the next time we meet. Happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.